Alright, here we go. Wednesday, April 8th. You know the story why I'm wearing this. Symbolizes the ordeal we are in right now, which is the coronavirus pandemic. Over 400,000 Americans. Actually, we have a third of the entire world's total. Alright, let's go. Let me take this off. Couple of things. First of all, big update today. I want to talk about that because, and you know, I go over the data every single day. The only thing that is kicking in right now are unemployment benefits. They are up 3.2 billion over last year. That might seem like a lot, and normally that would be a lot. I mean, if you look at the chart, and I'd be happy to send you that chart if you sign up for a 30-day free trial of MMT Trader. The link is in the description, but the chart is like, you know, usually, I mean, like for the last 10 years, we've been running year after year after year. Unemployment benefits have been falling relative to the previous year. That's easy to understand because, you know, we were in a growth boom, a job boom. But now that thing has just shot way up. But it's a little tiny bit. It's a little tiny bit. When you're talking about an increase overall of 150 billion in spending over last year, which that alone is not even a lot. That 3.2 billion increase, it helps a little bit, but you need a lot more. So the overall spending, there has been no acceleration. So in other words, this fiscal boost, and this is what the market is rallying on. It's rallying on sentiment. And I talked about this a couple of weeks ago. I said that the market is, for the most part, a discounting mechanism. It will reflect expectations and forecasts. So when we dropped like 34%, and remember, in many ways, the crash that we just went through was worse than 1929, 1930. I mean, by many metrics, all right? So that reflected a deep, remember, the economy, I think, in the 1930s contracted by something like 40%. And the forecasts now are for something like a 30% contraction in the economy. So that crash in the stock market reflects, to a large degree, I believe, that's my belief, and I said this a couple of weeks ago, that's why we were buying down at the bottom. That reflects what we're going to see in terms of the job losses, in terms of the GDP contraction, all right? That's my belief, that's how I feel. I've been, you know, we're basically long here at the bottom. But let me continue, and I think you know what I'm going to say. That is, there's been no fiscal. I remember back then, let me just backtrack. I said, you know, new developments, new variables had entered the picture after that crash, and the new variable was the stimulus. But nothing has happened. And what I was going to say a couple of seconds ago was the spending growth is flat year over year. It's not flat, it's up a little bit, but there's been no acceleration since the mass shutdown of the economy, since the stimulus measures have been passed. None of that money has hit the economy yet. So basically, we're running at the same level of spending that we were prior to the pandemic and prior to the stimulus being passed. There has been no acceleration except for unemployment benefits, but that is minuscule compared to the overall amount of spending. It's helpful, I'm not saying it isn't, but it's minuscule. So what's going on here is that this rally is a sentiment-driven rally and an expectation-driven rally. It's not over yet, okay? It's not over yet, but it will fade out if we don't get that fiscal boost. It will fade out and the whole thing will evaporate and we will hit new lows. The rally is not over yet. There's still money to be made in this rally, but And by the way, if that fiscal boost hits, and if it hits in a way that is meaningful, then the bounce can be sustained. But for now, there is nothing except for unemployment benefits. Even food stamps. There's been an improvement, but food stamp pay, and this is kind of really disappointing, because you see lines for food banks. I mean, I saw something, a video and images from Florida, like cars lined up for miles, people showing up at food banks to get food. Like the food stamps, they're just, and those programs were cut a lot since the last financial crash, unfortunately, because we really need it now. But food stamp payments are down relative to last year. They haven't even turned up yet. I mean, unemployment benefits have, but food stamps haven't. So let me repeat, this is a sentiment-driven rally. It's based on, there was way too much, the market discounted the contraction in the economy that we're going to see in the second quarter and maybe the third quarter. And then now there's the expectation of the fiscal boost, but that's not happening. This is a sentiment-driven rally. If we don't get the fiscal boost, it's all going to unravel, but it's not time to sell yet. Next point, we got the EIA weekly petroleum status report today. As you know, every Wednesday I put together a whole analysis of that, and boy, they had some really, really historic numbers in there. Crude inventories up 15 million barrels in the week ending April 3rd. That was the largest one-week increase ever. Gasoline up 10.5 million barrels. That was like the largest increase in 3 or 4 years or something like that. Distillate actually up just a fraction. So distillate was looking okay. Gasoline demand collapsed. Absolutely collapsed down to something like 5 million. I went all the way back to 1982. That is 38 years, and I could not find demand that low. This could be a record low, not a record low obviously, but in the last 40 years, this is the lowest demand. And of course, because nobody's driving. Gasoline production, lowest level in 35 years. A big drop, there was a drop, I shouldn't say a big, there was a drop in crude exports, and one thing interesting, there was an increase in refined product exports. So that, somewhat positive there. That might be a reflection of a little bit better external demand, maybe coming from China. A little bit of a barometer about what's going on in China, at least economically speaking. And so on the surface, obviously, when the zombies looked at that number, what do you think they did? They sold oil, right? And I sent out an email. I said, if oil goes unchanged on the day, you want to buy it. And we got down there within a few ticks of unchanged on the day, because here's why I said that. There was one element in that report that was pretty positive, and that was we finally saw a reduction in domestic crude oil production. It dropped 600,000 barrels a day, and that's a significant drop. Remember, throughout this entire time, over the last month, and even before, we were running at 13 million barrels a day, 13.1 million barrels a day, 13 million, even as recently as last week, the prior week, 13 million barrels a day. I kept saying, man, rig count is collapsing. Where is the reduction in domestic production? And finally, we saw it, 600,000 barrels down a day. It's now at 12.4 million barrels a day. Still a lot, but the contraction in domestic oil production has begun. And I've been saying now for a while, you need to see that happen before oil prices could stabilize. And now there's a second reason for that. That this OPEC meeting coming up tomorrow on Thursday, April 9th, the OPEC members are saying, look, we're open to cuts, but everybody's got to cut. even the United States. And the United States, our oil officials, if you want to call them that, saying we want a market cut. They're not committing to an enforced cut. They're saying we want a market cut. So this is a market cut. For me, it raises the likelihood that we are going to see some kind of an agreement on a cut, including OPEC plus, the United States, all of the producers. So that's bullish in the short term. But again, if this whole thing unravels, if the economy unravels because we don't get the fiscal boost, oil will go right back down again. So that's the picture right now. Stay tuned, right? See everybody tomorrow. Go to my website, sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye.